What is accounting? Accounting is the process of recording, analyzing, summarizing, reporting, and interpreting financial transactions stroke activities of a business of the final users, of a business to the final users. It's act of recording, analyzing, interpreting, and summarizing financial activities of a business to the final users of accounts. Who are these final users? The final users are individuals, they are government, they are organizations, they are shareholders, etc., and many others. This is what accounting is all about. Accounting is simple terms. It's a simple terms. Accounting helps answer questions like how much money is coming, how much is being spent, then is the business making profit or loss? That is accounting. The questions account can only ask: is the business making profit or loss? Is the business making profit or loss? How much is coming in? How much is being spent, which is how much is going out? We have key parts of accounting. Key parts. If you want to talk about accounting, we have the key parts of it. What are the key parts? Recording. Recording. Every financial transaction, which is made up of sales, expenses, and the payment, is written down. That is accounting. Sales, expenses, and the payments are written down. They are documented physically. This is usually done using journal and ledger. You use journal and ledgers. What is journal? It is the first book. It is the first step. It is the first book in the account records. It is the first book in the account records. Journal is recorded. It's a record book, not an account. It's just a bookkeeping. It's not an account. Journal. Then what is the ledger? Because after journal, you meet ledger. What is ledger? It is a book that contains all individual accounts of a business. Every person that come across your business, his record, his data, her data is being acknowledged and prepared in the ledger. That is why it's called ledger account. Ledger is an account. Then we have classifying. The first one is recording. Second one is classifying. Under key parts of accounting, transactions are grouped. They are grouped into categories like assets. We have capital. We have liability. What is assets? What the business own? That is an asset. What is liability? What the business is owing. Then what is capital? Is that cash or that stock that is left for the past or the last accounting period that you need to use in starting up a new business in the new accounting period. That is capital. Cash and the stock, the closing stock of the last period of accounting. That is capital. Why the assets are the things you owe, the building, the vehicle, the van, the furniture and fittings, the equipment. They are the assets you have. Those liabilities are the unpaid tax, unpaid loan, creditors, those that have paid you in advance, that have not collected their goods. They are your creditors. They are part of your liability in your balance sheet. We move to summarizing. At the end of every accounting period, what happens? Records are summarized into reports such as income statement. Income statement is where you now know whether you made loss or profit. Then the balance sheet, to know the value and the state of your business. That is what balance sheet is all about. Then the cash flow. The movement of cash is all about cash flow. Cash flow is all about the movement of cash. How money comes in, how much comes in, how much goes out. Then how much is being retained in the bank or in the cash at hand. This is cash flow. Why the asset is, why the balance sheet is where you now have a summary of what you have and what you are owing. That is balance sheet. Then the income statement talks about the income analysis of the transaction. Total amount sold, total expenses, and total profit or loss made within the stipulated period of accounting, of the business accounting. Then account analysis, which is the report to help decision making by the owners of that business. It's after this report are being summarized, then you now analyze it. The business owner can now analyze, at the end of the day, I made so amount of money. That means I have to improve. Or I made loss. That means I have to change my pattern of business and look into the expenses, those things that made me to spend much that I supposed to have gained. You minimize your expenses if you made loss. If you made profit, you strategize to make more profit. That is analyzing. That is where the summary comes in. Analyzing talks about the report, which helps you take decisions. Some other time we will continue more on accounting.